Good afternoon, friends. Just give us another 2-3 minutes to start, please. We're just waiting for enough number of attendees to join. Thank you. Good evening. We'll start in 1 more minute. So good afternoon to you all. My name is Neeraj Davar from Channel Technologies. I welcome you all to this expert talk session on tax reforms. We have had hundreds of registrations for this webinar, and I thank you for a very great response. Expert Talks is an initiative of Channel Technologies. We are a 22-year-old marketing services company involved in digital marketing services, marketing strategizing, creative and content writing services, and audience acquisition services for various enterprise customers in India, mainly MNCs. The objective of Expert Talks is to bring to executives and businesses insights from experts in areas of general interest, which will help in business development and business growth. We have put you all on mute today However, you can ask questions in the Q&A at 2 points in time in the presentation. We will do the presentation in 2 parts. After the first part, which should take around approximately 20 minutes, we will answer any questions that you may have. And then we will do the second part of the presentation, which should last another 20 minutes. Thereafter, we will answer balanced questions. For today's talk, we have invited Mr. Ashutosh Dikshit, Partner Tax at Deloitte, India. Ashutosh has over 30 years of experience covering tax policy and legislation, international tax and transfer pricing, and regulatory matters. He was the Joint Secretary, Ministry of Finance in the government 7 and 2012. His previous tax assignments as a member of the Indian Revenue Service included stints in tax assessment, tax audit, tax investigation, tax litigation, and tax systems. He qualified as a Bachelor of Arts, followed by a Bachelor of Law from Bombay University. Ashutosh holds a master's degree in international affairs from Columbia University, New York. He is also a postgraduate in rural management from the Institute of Rural Management in India, Anand. Ashutosh has been a member of the Governing Council of the Institute of Chartered Accountants of India, a member of the Working Group on Foreign Investment constituted by the Ministry of Finance, and the convener of the subgroup of the Planning Commission on Tax Revenue Resources for India's 12th five-year plan. Ashutosh frequently writes on tax issues in newspaper and journal columns. He has co-authored contribution on tax systems and reform in the New Oxford Companion to Economics India. I will now invite Ashutosh to deliver this talk. Ashutosh, all yours.
Thank you very much, Neeraj, and good afternoon, friends. Thank you for joining in for this talk, which I will be speaking about today. The way I want to structure this talk from the concepts to then hone into what is the actual initiative or the reform which the government has introduced, which we're talking about today. So let me start off by saying that on the 13th of August, the Prime Minister, through a video conferencing, launched a platform which transparency. And through this transparent, the attempt of the government is to have an interface with taxpayers, which essentially is through a technological platform, and which essentially does not then require any face-to-face interaction or manual interaction with the tax authorities. Just stepping back, before I talk further about this platform, which is supposed to cover, both assessments as well as appeal functions of the income tax department. And these are the the major interfaces which taxpayers have with the income tax department. Stepping back, we have the Constitution of India as a common heritage, all of us as citizens. And Article 265 of the Constitution of India states very specifically that no tax shall be levied or collected except by the authority of law. Now, the emphasis is that it uses two words, levied as well as collected. Also, it is the central government which, and therefore through this provision, it is done through the Income Tax Act. And actually are the highlight of every budget. which the finance minister introduces in February. And and that collection of that tax is essentially, where we file as businesses our advanced taxes, where we do tax deduction at source, or we seek credit for TDS, where we file our returns of income, where our returns are assessed, where demands are raised, where we may file appeals. All of these procedures are under the Income Tax Act, and all of these processes come under the collection of tax. And that also has to be as per the due authority of law. As modes, if these modes, this collection, because till date, a lot of this interface with the tax department, like I said, was through a single assessing officer who was in charge of the taxpayer's geographical area. So if a taxpayer is located in a particular territorial area, there would be assessing officers who would also be linked to that territorial area, and the officer and the territorial jurisdiction. And therefore, the assessing officer was in charge of all of these functions which I talked about. And it is this, as well as the appeal functions, which have been substantially, the process has been substantially revamped through this technology platform, which the Prime Minister had launched. Could we go to the next slide, please, so that let me speak about, the faceless assessment. So I'll be speaking about this in my talk through, once, which is the faceless assessment, and the other is the faceless appeal scheme. So the first thing I would like to emphasize to all of you who are listening in and all of you who are running businesses, that this is an as-is situation. So tax assessments which are pending in the Income Tax Department, or there are any tax appeals which are pending in the Income Tax Department, then accepting some very specialized cases, for example, search and seizure cases or international tax. Essentially, this whole body of work has now got switched to a faceless mode. Therefore, it's imperative that we as businesses and as taxpayers realize that this is and from next financial year, this has already got instituted, and therefore it's imperative that we talk about it and look at the various nuances of these particular schemes. So that is what essentially what this slide is saying, is that all current assessments and also all pending appeals, they will both be covered under this an information technology enabled platform. I was mentioning that how is this different? Before this schemes were introduced, the government actually amended the Income Tax Act to take the power to to introduce such a scheme. And the imperative or the substantial part of the amendments which were made essentially allowed the government to institute such a scheme to impart greater efficiency, transparency, and accountability to this entire collection process. And that was by way of eliminating the interface between the assessing officer and the taxpayer in the course of proceedings to the extent technologically feasible. The second one, which was outlined, was optimizing the utilization of resources through economies of scale and functional specialization. And the third was introducing team-based assessments with a dynamic jurisdiction. So essentially, what the faceless assessment scheme does is to de-link the current linkage between an assessing between a taxpayer who is therefore, let's say, who's doing business, therefore the assessments of that particular taxpayer are done under the jurisdiction of a particular assessing officer. The assessing officers may get transferred or may get changed, but that jurisdiction remains. Now, what was what were, let us say, we call this as a territorial system. What essentially this faceless assessment scheme is going to do, it is going to move this towards what we call a functional system. And I will talk about that more in the next slide. But before that, let me say what were the drawbacks of the current system where a taxpayer or a business is directly linked to the assessing officer for all functions. So essentially what we're saying here is that the assessing officer would be in charge of being the assessing officer would be in charge of making any assessments, notices, any rectifications, collecting demands. All of these functions were done by that assessing officer who was in charge of the geographical jurisdiction of the taxpayer states. Now, when we look at how the income tax department is currently organized, there is, of course, there is a revenue target which is given to the income tax department. That revenue target emanates and then is from the Central Board of Direct Taxes, and then it is divided among the different geographical jurisdictions, different metros, different non-metros. Those particular revenue targets are handed out, and therefore the assessing officer has a revenue target. Now, India's budget and collection mechanism is entirely cash-based, so it is not a question of a mercantile system of accounting. It is a collection is only recognized when cash actually comes into the consolidated fund of India. And therefore, what was noticed over the years, that there was a lot of pressure on assessing officers, which then got transferred to taxpayers, because it could lead to behaviors like, for example, making a frivolous addition so that you could collect certain tax, before the end of the financial year. And even though taxpayer a year or two down the line may win the appeal, but then the assessing officer's target would have been served because he would have collected the cash in that particular financial year and gone to meet his target. Similarly, there would be an incentive for the assessing officer to postpone any issue of refunds or rectifications which would lead to refunds, because the incentive could be that, I need to collect taxes, and therefore if this refund goes out in this financial year, I'll not be able to meet my target. So, I'll do this, but perhaps I'll do this in the next year so that, I'll be able to meet my target this year. So these were the kind of, I would say disincentives or misincentives or misaligned incentives, which would emanate from this kind of a structure. And of course, then this generates its own, ecosystem of rent seeking or, behavior. So that would be, another issue, which would be an indirect result of this. So could I go to the next slide, please? So therefore, what does this faceless assessment scheme then do? Essentially, it moves this all into a virtual technological space. There is a platform which has been created. There is an entity which is again a virtual entity called the National Faceless Assessment Center. So of course it will be manned by income tax officials, but this is essentially going to be a hub and spoke kind of a system where the interface which all taxpayers have, whether that taxpayer is sitting in Mumbai, whether they're sitting in Delhi or in a smaller place like like Nasik or any other city, when that taxpayer is interfacing for its assessments with the income tax department, all of them would only be interacting with this National Faceless Assessment Center, which is the NFAC. It is the NFAC which will then send all the communications which the taxpayer has made to the income tax authorities of the department. And similarly, if there is any communication to be made to the taxpayer, any notice to be issued, any question to be asked, that will again only get routed through the national, through the NFAC. So that is the NFAC becomes the hub in that sense, and the other things all become the spoke. So all functions, like I said, will be faceless, subject to certain defined exceptions. And those are, like I said, very, very specific kind of exceptions. The cases now this is important. So as I was saying is that in the earlier system, if your case or if the taxpayer's case was picked up for scrutiny, it would automatically be done by the assessing officer to whom the jurisdiction, territorial jurisdiction had been allocated. Now under this system, a taxpayer, even if he's located, let us say in Karnal, the National Faceless Assessment Center may allocate that case to an assessment unit which is in Mumbai, and that assessment unit will be then doing the assessment for that taxpayer rather than his territorial assessing officer who would have been sitting in that same city. Now look at where this then takes out, when we look at the disincentive which I was talking about earlier, or the misaligned incentives. Therefore, there is no way for the territorial jurisdiction, the assessing officer, to be able to or to have the incentive to make an assessment or make a high-pitched assessment in order to collect more taxes, because this taxpayer is not going to be assessed by him at all. So that is one of the ideas behind this faceless assessment scheme. The next is the selection for scrutiny. This will also be based on defined criteria. So it will not be a case that that a jurisdictional range or assessing office or ward will then select particular cases for scrutiny. This was already the case in the department, that scrutiny cases were, the selection for scrutiny was a centralized function, but this remains, it will be a centralized function, and there will be defined criteria which will be subject to change every year, and based on that, cases will be selected for scrutiny. And again, the notices, rather than coming from the jurisdictional assessing officer, they will come to the taxpayer through this NFAC, and this will be coming on the taxpayer's registered email IDs, registered mobile numbers. Also, as you'd be aware, all taxpayers have got now what you call income tax logins onto the income tax business platform, and therefore that is where you would be able to view these also historically. And as a repetition, the assessments will be done in electronic mode, no human interface. So therefore, the interface will be only through that particular technology platform. And the last thing is the team-based assessments. I will talk more about this team-based assessment in the next slide, but essentially what we're saying is that instead of, when we talk about functional, so earlier, if the assessing officer had to, in the territorial jurisdiction, if the assessing officer had to make any inquiry, that assessing officer would have done it himself. Now in the assessment function itself, and can we go to the next slide? Now in the assessment function itself, that function itself has been split up, as you will see, into assessment units, verification units, review units, and technical units. So this is the second major change in the way the income tax department is going to function. As you see, on the left hand side, you have the taxpayer. His interface with the department will be through the will be through the National Faceless Assessment Center. Um, Neeraj, I think we got a message saying that the slide is not visible to some participants. Should I stop here?
No, it's visible to us. So
if you'd
maybe
like
it's
to
that
share that.
individual
Okay,
participants
sure.
issue.
Okay, okay, fine, right. So as I was saying, so this is the second significant aspect which is there, is that the assessment function itself, that has also been sliced and diced. So earlier, in the earlier system, it was the assessing officer who would issue the notice, who would then also ask for information from the taxpayer. Then if there was any verification to be done, it was the assessing officer who would issue the notices to third parties, call them, take their statements and do any verifications, or send an inspector out into the field to do verifications. And it would be the assessing officer who would then issue a show cause notice to the taxpayer, and then after reply, complete the assessment. So besides the fact that the assessing officer itself has been removed, in the sense that the assessing officer himself no longer gets attached to a taxpayer, because that has, as I described earlier, has got delinked. The assessment function also has now been split. So there will be an assessment unit. So when this particular assessment is assigned by the NFAC through the RFACs to an assessment unit, that assessment unit will do the assessment. But if it wants, during the course of this assessment, to do a particular verification, like it wants to do a field check about something, or it wants to issue a notice to some person whom a sale has been made, or from whom a purchase has been made, or from whom a loan has been taken, then it is not the assessment unit which will do it. It will, through the NFAC, it will say that it wants to do this verification, and that will get assigned to another verification unit. So so here itself, you see that the assessment function itself has got sliced and diced. And then also, in the same vein, if the assessment unit feels that it needs some specialist advice, or it needs some particular inputs, because there's the business is very specific, or there's some issue which is arising, it can also then refer to the technical units again through the NFAC, saying that we have this question, could we seek some help from some expertise? So then the technical unit can come and give those inputs to the assessment unit through the NFAC. So this is what we are talking about, optimization of resources, which was one of the functions which this faceless scheme is supposed to do, optimization of resources and better utilization. And then something which is entirely new, which is that which was never there earlier, is that if the assessment unit determines that it wants to make an addition to the taxpayer's returned income, then the NFAC will take a call whether this particular addition needs to be reviewed. And therefore, even prior to this being finalized, it can go to a review unit, and that review unit can review that draft order, and it can therefore suggest changes. And if it does suggest changes, then the finalization can go to another assessment unit. So therefore, at the back end, if you look at it, the assessment function itself has got sliced and diced into different units. And there is also an internal review mechanism before the assessment is getting finalized, if there is any substantial addition which is going to be made in the hands of the taxpayer. Could we go to the next slide, please? So this is the same, what I was describing, but this is in a different mode. I'm looking at it from the taxpayer's point of view. As I had mentioned, the National Faceless Assessment Center, that is the entity through which the interface will happen. And this is once it will issue the scrutiny notice to the taxpayer, it will then assign the assessment itself to any assessment unit across the country. and the assessment unit, if it wishes to seek any information from the taxpayer, it will send across that information to the NFAC, and it is the NFAC which will then forward it to the taxpayer for replies, and the taxpayer will again submit the reply to the NFAC only, which will get passed on. Similarly, if the assessment unit wants to carry out any verification, it'll send this information to the NFAC, which will then assign it to a verification unit, and the verification unit will then again send it onwards to the assessment unit through the NFAC. So this is where this hub and spoke model I was talking about works. This is the NFAC, which is the hub, and that is the interface even within the department. The units are interfacing with each other through the NFAC only. Similarly, then if a substantive addition is proposed and the NFAC feels that it needs a review, then it will get sent to a review unit. And like I mentioned, if the review unit is of a differing opinion, then there is an iteration. So essentially, what we come down to is a taxpayer who will now, in the current year itself, face a very different kind of ecosystem if there are any ongoing assessments for that particular taxpayer, because he will not be interacting with any defined assessing officer. He will not be responding to any defined assessing officer. His interface will be through this National Faceless Assessment Center. So when we look at this, could we go to the next slide, please? So, this is where I would say that, my first phase of the talk, which was about the national, the faceless assessment, scheme. That is the first half, and I'd be happy to answer any questions, and I'll hand this over to Neeraj.
Ashutosh, thank you very much. So I have a question for you, which is that regarding the faceless assessment scheme, how should businesses prepare for this new kind of interface?
Yes, yeah, thank you. Could you go to the previous slide so that I can, when I speak through this answer, I can, yes, thank you. So, like I said, this ecosystem is new for everybody, even for the income tax department and even for taxpayers. And I think this will have to be, in some ways, a bit of a journey of discovery for both. The way but if I have to have any, prima facie learnings or advice for taxpayers, number one is that you will, I think, have to be more keyed in into what communications you're getting from the department. Because earlier, if you had a tax advisor, who was assisting you, many times, because that person would be, representing you in tax proceedings, which even today can be the case. That's not, ruled out. Therefore, many times the communications, he would be handling, and it get back to you. In this scenario, there could be multiple communications which come to you, which could come to your registered mobile number, and therefore it's imperative that you know what is the mobile number you've registered for communication with the income tax department. You need to go and check up so that you don't miss anything. Historically, many times what happens is that one may have registered a particular mobile number and then forgotten about it, but it's imperative that one goes and checks that and updates it. Number two, similarly, email ID. If you have given any email ID for communication with the income tax department, the scheme is based on communications through the internet. So it's no longer necessary for them to send you a printed notice on your address. This would also be a good service if they sent something to you by email. And therefore, again, very imperative for businesses to know what email ID they have registered, with the income tax department, because if a communication is sitting in your email and you've not responded, then it will be difficult for you to say that that you were that you were a compliant taxpayer. And in all of these, the other thing is that in generally they will give you a 15-day notice period to respond. And even if you want more time, you will have to ask for more time, which I suppose would be given on 1 or 2 occasions. But the main point is that because all of this is electronic, everything will get logged in. So there will be history about how long you took to respond to questions, how many times you took an adjournment, and all of these things then create a taxpayer profile. My first input would be that businesses need to get more clued into this particular transparent or this particular IT platform, and definitely need to know that that their IDs are properly updated so that they can respond in time to any such communications from the department. So I would say that is one. The other is I think is that which I think may going forward, that since all of this will have to be uploaded or onto particular websites of the department, there may be issues with bandwidth and those kind of things. And I think that will have to be some kind of a learning process, because the income tax department will also perhaps have to adjust its own bandwidths in different cities, see what is available, what is not available, so that taxpayers don't struggle in responding because they have to upload bulk documents and other kind of things. So these are the two I would say is immediate inputs which I can give on that question, Neeraj.
Okay, so we have few more questions here.
Sure.
One question from Mr. Sharnaz Bodanwala. Are the new criteria for scrutiny made available to the assessees through some income tax website?
Traditionally, in all tax administrations, they will not tell you what is the criteria. But once your case has been picked up for scrutiny, then they would be telling you on what issues your case has been picked up for scrutiny, and they will examine those issues. If beyond those issues they want to examine some other issues, there will be internal processes by which they can expand that, but they would be subject to checks and balances. But the short answer is that you will not get to know the criteria beforehand. You will get to know why your case has been selected once you are issued a notice for scrutiny.
Thanks, Ashutosh. There's another question by Manoj Singh Adhikari Panwar. How does it help in filing individual direct tax IT return for financial year 20?
This does not have a relation to income tax filing. So I'd say that this neither helps nor hinders in filing of income tax returns. That is a separate e-filing platform.
Great. So there is a question from Dhruv. Dhruv is an entrepreneur. He's just 19 years old. He says that I'm running my own digital marketing service business. Have got clients from the USA and they pay me via PayPal, and I'm taking money in my mother's account. Is it okay or should I start my own account? So it's a very basic question.
Yeah, but Dhruv, I am not, it's not possible to give specific tax advice on through this forum. I think you will need to, consult with the, with the proper tax advisor. But let me just give you a general answer that irrespective of where you receive your funds, if you are the one who is doing business, then it is your responsibility to report all your receipts, irrespective of where they have been received, in your income tax return.
All right. Thanks, Ashutosh. We can move on to the second part of the presentation.
Sure. So, like I said, the interface which the taxpayer has with the income tax department essentially is on two. One is, of course, the return filing. But after the return has been filed, I talked about the faceless assessment system. But then again, in the end of September, not only was the faceless assessment system has not that only been activated, we now also have a faceless appeal system which has been activated. Now again, let me talk to you about currently how the appeals process works and what is the change here. So again, when I'm talking about a small to medium taxpayer, and my intention is to address that kind of a taxpayer through this talk which we're having, is that if let us say an assessment has been completed in your case and an addition has been made. Now you don't agree with that addition, so you may have paid some partial tax, 15%, 20%, and then you filed an appeal. The appeal currently goes to a Commissioner of Income Tax Appeals. Now, when this appeal process happens, the Commissioner of Income Tax Appeals, you will be the one who's filing the appeal, and you will have certain grounds of appeal. And you will then, substantiate your grounds of appeal. You'll say why you think this addition is incorrect. You will give your evidences. And the CIT, the Commissioner of Appeals, who I'll be calling CIT Appeals, will then, ask anything of the assessing officer, the one who has done the addition. And he'll come to a conclusion whether this has been correctly done or not. And accordingly, he can either confirm that addition, or he can delete it, or he can reduce the quantum of that addition. And therefore, accordingly, the tax demand against you can, would vary. Now, again, in this case, if you were a taxpayer, let us say, who was sitting in Bhubaneswar, there would be a Commissioner of Income Tax Appeals who would be assigned to you again on a territorial function. So all appeals in Bhubaneswar would go to that Commissioner of Income Tax Appeals. So it was the same thing. So therefore, there was a one-to-one interface in that geographical territory between the appellate authority and the taxpayer. What this ecosystem of faceless appeals does is that it breaks that particular linkage. It moves it to a functional form. So what do we again have a similar a similar structure as I was talking about in the national faceless assessment center. So you see that the initials remain the same, except that the assessment becomes appeal. So you will have the taxpayer, when he files the appeal, it will get assigned by the National Faceless Appeal Center to any appeal unit or a commissioner appeal, or here it's called an appeal unit across the country. And the same kind of interface which I was talking about, which will happen in the assessment proceedings, in a similar manner, a similar kind of interface will then happen with the taxpayer in these appeal proceedings. So the National Faceless Appeal Center, it will be the interface between the appellant, and here the appellant and the taxpayer means the same thing here. And also, if there's any other person, or even if there's an interface with the National Faceless Assessment Center, which because if certain records are to be called, or another kind of certain previous information is to be sought, that's also through the National Faceless Appeal Center. And even the assessing officer or the assessing unit, as we said, if there's any information which the Commissioner Appeals wants to take from the assessment unit, or it wants to get the assessment unit's views, the one which has done the assessment, that will also be through the National Faceless Appeal Center. So essentially, if we look at it, the interface between the different units within the appeal function, that will again has got sliced and diced to an extent, and the interfaces through the National Faceless Appeal Center, as well as the interface between the appeal unit and the taxpayer, that also has will be through the National Faceless Appeal Center. The regional faceless appeal centers are essentially halfway houses between the two. So there will be 4 regional faceless appeal centers, which are to be located in our 4 main metros: Mumbai, Delhi, Kolkata, and Chennai. And they essentially will be facilitating the conduct of appellate proceedings. So for example, if there is any video conferencing to be done, anything else, those are the kind of functions which it will look after. Those functions, can be more fleshed out depending on how this entire process goes forward. And then at the bottom, you have appeal units. So the traditional CIT appeal now becomes an appeal unit. Although currently it's called an appeal unit, essentially it will be CIT appeals. But here I would like to mention that, there is again a significant change here, and that will get reflected in the next slide. So could we go to the next slide, please? Yeah, so this is a busy slide, but I would want you to first concentrate on the dark green circle in the center, which is the National Faceless Appeal Center. As you see, all the lines point to here, and that is why this is the hub, because it will be the interface between the taxpayer and the income tax department, or the appellate authority. And even the appellate authority, if it has to deal with any other income tax authority, that will also have to be through the National Faceless Appeal Center. But what has happened, and a new function has got added in this appeal process, which I wanted to highlight. If you see at the bottom of the screen, you see something which is called Regional Faceless Appeal Center, and under that you see Appeal Unit 2 and Appeal Unit 3. Now, what is this new function? So currently what used to happen is that if the taxpayer's appeal was with the Commissioner of Income Tax Appeals, that Commissioner of Appeals would hear the taxpayer's case, take whatever his submissions were, then interface with the assessing authority if it wanted to report, and this would then he would come and issue notices to the taxpayer for any response, and then he would finalize the assessment. So when finalizing the assessment, he could sustain the entire edition. He could delete it, or he could sustain part of it, and it also has certain powers of enhancement. Now, so he was therefore the whole and sole authority to decide all of this. And after that, then the taxpayer's only recourse would have been to take that particular matter in higher appeal to the Income Tax Appellate Tribunal, which is the next appellate authority. What has been done now in this new faceless assessment, faceless appeal scheme, is that they will decide a threshold. So let us say if a certain addition has been made to the taxpayer's income against which he is in appeal, the taxpayer is in appeal. If that addition is substantial, and the appeal unit one in this case, if it is going to sustain that addition, then the National Faceless Appeal Center would have set a threshold that if this addition is above a certain amount, and that threshold has not been stated, but that will get notified, then it will not automatically accept that confirmation by the Appeal Unit 1. It will actually send it for review to an Appeal Unit 2. So essentially then, even at the back end now, it will not be one CIT appeal or one appeal unit who will be determining. But if that Appeal Unit 1 is sustaining an addition which is above a certain threshold, then that particular unit's decision will get reviewed by another Appeal Unit 2. And in case the Appeal Unit 2 does not agree with what the Appeal Unit 1 has done, then it will go to an Appeal Unit 3 for a finalization. So therefore, in this system, another layer of checks and balances has been added in the appeal function, which I think is quite welcome. And so if you look at it, this is not just a case where my interface with the department has become, instead of manual or instead of face-to-face has become through an electronic mode. My interface with the department has become anonymized to the extent that the assessing officer and there is no direct linkage between us. And even if the assessing officer wants to make an addition which is above a certain amount, that is subject to review, which was not there earlier. Similarly, in an appeal function, I will not be directly linked to any appellate authority who is in my geographical area. It can get assigned to any appeal unit across the country. And here too, if the appeal unit is of the opinion that there is a substantial addition and that is of the opinion that needs to be sustained, that can also be reviewed by another appeal unit. So that is the extra layer of checks and balances. So this is essentially what is happening in the national faceless appeal ecosystem, and this again is for all current appeals. So again, I would say is that all current appeals will also be going through this system, and therefore it's useful for businesses and taxpayers to know that this is what the situation is, how it's going to be going forward, and therefore be ready to respond promptly to any information being sought in their appeal proceedings. So I would, can we go to the next slide? I'd be. So this is essentially, what I wanted to cover in this session. This entire new ecosystem, both I started off from the Constitution, how this, the executive or the government's responsibility is not only to levy or determine what is the tax rate, but it has to be collected in a proper manner through proper interface and through proper systems of natural justice. And this faceless assessment and appeal scheme is the way to is the government's initiative to take this forward on that front. So I'll close here, Neeraj, and I'll pass it on to you for any questions.
Thanks, Ashutosh. We have a few questions here. Can you hear me?
Yes, I can hear you.
Okay. So a question from Brijmohan Beriwala is, can or will old appeals be routed through faceless centers? Will there be compulsion for part payment of levied additions in the new system?
So I didn't understand the second question, but let me answer the first question and then you can ask me the second question. The first question, yes, as I had mentioned in the first slide itself, all current pending appeals will be going through this system. So if you have an appeal currently which was being heard by a Commissioner of Income Tax Appeals who was your geographical appellate CIT appeals, that appeal will also get assigned under this new system. That is what the notifications say. What was the second question? Could you repeat that?
Second part of the question, if I understand correctly, means that whenever an additional tax is levied, you have to make a part payment of it before you can appeal. So is that still there? That was asked.
Yes, Neeraj, that still exists. Used to be 20%, then it was raised to 30. I think it is somewhere around that. Yes, that still, and I think that is still a pain point, because if a frivolous addition has been made and that is substantial, the taxpayer feels that even if he's paying 20% or 30%, actually he shouldn't be paying anything at all. So I would say is that that does not get addressed here. But yes, if the possibility that somebody makes a frivolous addition in your case going forward, if that gets reduced, then perhaps the probability of you having to pay 20% or 30% of a frivolous demand, that probability also gets reduced.
Thanks, Ashutosh. We have another question from Ruchi Goyal. She wants to know, what will regional faceless appeal centers do?
So, they are essentially, what I was saying is there's halfway houses, but currently the way it seems is that, that some of the logistical issues which will need to be handled could get handled by the regional, by the RFACs. But essentially it will be the NFAC which will be the hub and spoke of this mechanism. It may be that, if a taxpayer wants to have, let's say, a video hearing, then, the RFAC may come into the picture to be able to organize that. It's also, many times there are a lot of administrative, responsibilities which relate to the income tax department, not so much to the taxpayer. they could also be, housed in the regional, in the RFACs. So that, I would say that that currently is what the situation seems to be. Going forward, it may also, have some additional functions based on how this entire scheme progresses.
Thanks, Ashutosh. I have another question for you. What is the
Sure.
kind of change in the interaction between taxpayers and the income tax department that could come about from this faceless ecosystem?
Yes, so I think I've briefly or referred to some of this, at length, in the sense that, what was in terms of the assessment function today, and I'm talking about small and medium taxpayers, what were their pain points? Some of their major pain points were have been is that in that additions are being made which do not seem to have rational basis. Even though they may have made submissions about certain things, they get ignored. And one of the reasons why this was happening, and perhaps a substantive reason, was that the assessing officer's incentive was not to assess the correct and proper income, but may have been that he for meeting his own targets, that assessing officer was making that addition so that he could collect certain tax during the financial year and therefore meet his targets. Therefore, this is of course right now a hope, and we'll see how this how this actually pans out going forward. But with the cutting of this umbilical cord between the taxpayer and the assessing officer through a geographical jurisdiction, and moving this to a functional functional play with the slice and dice of the function itself, one would hope that that kind of interface, or that dissonance, that friction in the interface between the taxpayers and the tax department, that should reduce, not just in assessment, but also in appeal proceedings.
Thanks, Ashutosh. There's another question about when you said as is basis. Would the cases pending in tribunal also go through this faceless, or they will continue in the normal way?
No, so the income tax appellate tribunal is not. When I had spoken initially, I had said that the income tax department is the one which is in charge of collection of taxes through the Income Tax Act. The Income Tax Appellate Tribunal is actually an authority which sits outside the income tax department. So therefore, it does not come under the purview of either faceless assessment or faceless appeals. Appeals which go to the Income Tax Appellate Tribunal will be governed by rules of the Income Tax Appellate Tribunal, and they will not come under this scheme.
Thanks, Ashutosh. There's another question from Dr. Manoharan, which says, under this platform, is there any space for discretionary best judgment assessment?
Yes, there is. So, what we call is a best judgment assessment in normal language. It's section 144 of the Income Tax Act. Essentially, there are two ways in which a best judgment assessment is done. One is that if the taxpayer himself is not responding, and therefore the assessing officer says that, look, I've asked these questions, I have to, pass this assessment order by a particular date. Since I'm not getting any response from the taxpayer, therefore let me use my best judgment to assess the income. That is one. And the other is that even though the taxpayer has responded, but if I feel, if I'm of the opinion that, that response is not correct and is not giving me all the facts for me to make the assessment, and therefore I can, also do a best judgment assessment. But that is why, so that power is there under the faceless assessment scheme. And that is why, I hark back to my earlier advice that it is imperative for taxpayers to know what is the registered mobile number they've registered with the department and what is the email ID which they have registered with the department. Because it should not happen that by default, I am not answering, a scrutiny notice or any other, information being sought, because I'm not aware and I haven't got any written, notice in writing through my tax advisor or at my own business premises. And, that will not be a sufficient defense. And therefore, that's why it's important, and I highlighted that earlier.
So there is another question, a generic one. Would this, in your view, seriously reduce the tax terrorism?
I would be repeating myself. I would hope that the words which I would use, that currently the kind of friction which happens during assessment proceedings, sometimes is unwarranted, and that because like I mentioned, it's not just that the interface has been made faceless. The incentive has also been taken away, because the assessing unit or the appeal unit is no longer linked to a geographical area. But the third thing I mentioned was that in both of these functions, before a final assessment order or an appeal order is passed, which is substantial, which will create substantial, demand in the taxpayer's case, that will also get reviewed at the back end, which was never the case in the current process. So I would think that all of these procedures should logically, lead to a much smoother experience for taxpayers. But like I said, we'll have to wait and see.
So this is the last question. What if the taxpayer wishes to explain some issue in person before an assessment or appeal order is passed? How does that happen?
Yeah, so I did mention this briefly, when I was talking about this regional faceless appeal centers. There would be conditions where I would want to appear in person and explain something. So the way the department has reacted to this when in public fora is that that interface they will create through a video conferencing facilities. And they will be having the video conferencing could be from the taxpayer's own premises. But if there would be challenges which taxpayers face, then they will be having these video conferencing facilities at the income tax department certain premises, where that personal interface can happen through video conferencing. So that will be that will be available. I don't think in all cases, but on case-to-case basis.
Thank you, Ashutosh. Thank you for such an interesting session. And thank you for giving us all the answers to questions that were sought. I would now request all the participants to answer a short poll before you leave. And I want to thank Ashutosh and thank Deloitte for being a knowledge partner for this session. Please answer the poll and then you can leave the chat, leave the webinar. Thank you. Thank you very much for attending this session. We'll close it now. Thank you.